Okay. Welcome to the video of due diligence. Okay. So we are going to see the due diligence as a separate video, and in future I will upload the forensic part. Okay. In here I will be covering those areas which will be very important for your exams, and at least cover these areas and go to your exams. Okay. Let's start. Due diligence. So due diligence is nothing but it is a process. What is a process? It is a process of investigation. So what is a due diligence? Due diligence is a process of investigation performed by the investors. What they are going to do? They are going to go into the details of the potential investment, such as examination of the operation and the management and verification of the material facts, whether we can buy this company or not, we can enter into these transactions or not. So this is a process of investigation because I'm going to invest on you. So before investing on you, I'm going to examine your operations, management, all the facts, then I will be investing. Okay. So due diligence is a careful study of both financial as well as the non-financial possibilities. Done. Next. Here, due diligence involves an analysis carried out. So, where the due diligence will be used? Okay, what are the areas where the due diligence can be used? So, due diligence can be used before acquiring a controlling interest in a company is here. Before acquiring a controlling interest in the company, and also a recommendation for the investment or advancing a loan or credit. Okay, recommendation for investments or advancing a loan or credit. So these are the areas where the due diligence can be used. Apart from that, due diligence may also be required to be performed in the following cases. There is a question in your test your knowledge. So what are the areas where the due diligence, other areas where the due diligence can be used? So you can write corporate restructuring, venture capitalist financing, leveraged buyout, lending, corporatization. Remember any 3 to 4 and write it in your exams. So there is one emerging area or upcoming area, maybe an MCQ point, we don't know. So what is that? Around human rights and environmental due diligence. Okay, human rights and environmental due diligence. Just read this once. Just read. Okay, just read. Remember the emerging area which is mandatory. Okay, emerging area is around mandatory human rights and environmental due diligence. This is an emerging area. Now I'm going into the difference between the due diligence and audit. How can you write it in your exam? Okay, so what is audit, what is due diligence? Audit, due diligence, both are independent examination. See, audit is an independent examination. Due diligence is not an independent examination. You will write examination, right? So audit is an independent examination of the financial statements. For what? To express opinion, right? Due diligence is an examination of potential investment to confirm the material facts, right? To confirm material facts. So this is how you can remember. Audit, in audit we are going to give some opinion. In due diligence we are going to see whether I can invest here or not. Whatever they are showing, is that appears to be true. Okay, are they doing any falsification or manipulation? So these are the things you are going to verify by doing the due diligence. Now, here are some important points to run through. What is the importance of due diligence? So, due diligence is typically conducted after the parties involved in the transaction, okay, they would have agreed, okay, they would have agreed to the deal, and they have the preliminary understanding. Already they have the preliminary understanding, but before signing of the binding contract, so before signing the binding contract, but after getting into an understanding, okay, they will go into the due diligence. Okay, this will be an MCQ before signing a binding contract. Done. Now, so what is a due diligence? So the purpose of the due diligence is to assist the investors in finding out all the reasonable care, okay, about the business. So he will say, okay, how can you be very cautious about these areas? So we will be assisting them in understanding whether to invest here or not. Okay, including its success factors as well as its strength and weakness. Everything will be understood after doing the due diligence. Now, main questions, okay? Important questions. What are the reasons for carrying out the due diligence? For your exam, how can you remember? The reason for due diligence is nothing but your A, B, C, D. What is A? A stands for, first of all, for doing the due diligence, you need information. Information, that to gain the information that will be useful for valuing the asset, defining the representation, and negotiating the price concessions, right? So first of all, you need information for three things: valuing asset, defining the representations and warranties, and negotiating the prices. A. B. B stands for to confirm what the business appears to be. They are saying, yes, my business is going this way, but we have to see whether, yes, it is actually doing good or not. Okay. A, B, C. C stands for criteria. What is the criteria? Whether the transaction complies with the investment acquisition criteria. A, B, C, D. D stands for deal killer defects. If you are going into that transactions, okay, whether it will be a very bad, okay, this is to avoid a bad transaction, we will be identifying the deal killer defects. So if we didn't identify those defects, then it will kill our deal. Okay, so that is called as a deal killer defects. So what are the reason? A, B, C, D. A stands for information for valuing the assets, price negotiations, etc. B stands for what business appears to be, you have to confirm it. C stands for criteria. Okay, investment or acquisition criteria should be complied. And what is the D stands for? Deal killer defects. Okay, you have to identify it. Next, what is the classification of due diligence? Okay, classification of due diligence, which is very simple. You can remember this way: CPT life. Okay, so CPT is the foundation, the other name for foundation exam previously. So CPT life. Okay, life. Now, so we are going to CPT life. What is the CPT life? C stands for commercial or operational due diligence. So in commercial or operational due diligence, you are going to write three key points. What is that? It involves evaluation from the three perspective. What is the perspective? Cost perspective. Okay. C stands for commercial, O stands for operational, S stands for strategic perspective. Second, C. Next, we are going for P. P stands for personal due diligence. What is a personal due diligence? It is done such that the entity's personal policies are in line. Okay, whether it is in line to suit the requirements of restructuring. So if you are going to do restructuring, whether the personal policies are in line. Okay, so see here, it is whether the personal policies are in line. Then next, CPT. T stands for tax due diligence. What is this tax due diligence? Tax due diligence is an integral component of the financial status of the company. This point is going to come again, so be careful with that. Okay, it is generally included in the financial due diligence. So you have to see the tax effect of the merger or acquisition. Tax effect of the merger or acquisition. So now we are done with CPT. Now we are going into life. Life stands for, L stands for legal due diligence. Legal, you have to see the legal aspects, right? Next, I stands for information system. Information system, you have to see the computer system. Legal, you have to see the legal aspect. LI, F stands for financial due diligence. In financial due diligence, you are going to see books of accounts and other information, okay, which is relating to the financial matters of the entity. And financial due diligence will be done after the completion of commercial due diligence. Remember this point, okay? Financial due diligence will be done after the completion of commercial due diligence, right? Last one, E. E stands for environmental due diligence. You will see the entities environment, you will study the entities environments, whether it is flexible, adaptable. Okay, you will see those things. So this is how you will see the classification of due diligence, nothing but your CPT life. C stands for commercial due diligence, P stands for personal, T stands for taxation, L stands for legal, I stands for information system, F stands for financial, and E stands for environmental due diligence. Okay. So next, we are going into the financial due diligence. In financial due diligence, we are going to see some aspects. So what are the aspects we are going to look into? Is first, to understand this, okay, to remember this, you have to remember Ram. Just Ram is working in TCS, so he got BP. So this is the clue trick you can remember. Ram, R stands for review of financial statements. Second, counting policies. M stands for management and employees. T, taxation. C, cash flows. S, statutory employees. B, brief history. P, projection. So this is how financial due diligence you can remember the aspects. Now we'll go into it further. Financial due diligence. Okay. Financial due diligence is sometimes interpreted as a complete due diligence process, but you have to be very cautious whether all the aspects have been covered or not. If all the aspects has not been covered, then you cannot treat it as a financial due diligence. So that is the thing, it is covered here. Okay. And one MCQ point you have to be careful is that the role of financial due diligence commences only after the price has been agreed. Okay, the price should be agreed, then only the financial due diligence process will start, right? Okay, so I have given you the insights of this, okay, previously in that chart. So Ram, TCS, BP, the same is discussed here. So what are the things you have to see? So it is a full-fledged financial due diligence is conducted. Okay, if a full-fledged financial due diligence is conducted, it would include the following matters in the scope. See, the same thing whatever I have said. Okay, some tweaks will be done, and the sentences will be given here. So I have said management and employees. Here it is given management information system, accounting policies, background, okay, brief history. So many things will be repeating here also. You can study that. Here we have given what is the financial due diligence, how it is conducted, and what are the things have to be included in the scope. So first of all, brief history of the target company and background of its promoters. So we have to know the target company. So just knowing the target company and history of the target company, okay, will give you what are the turning points, how you can, what are the survival strategy, how you can survive, okay, and what is the market share enjoyed by the target company, how it is going, what is their product life cycle, and whether the resources are adequate or not. So these are the things you will be understanding the history of the target company and the promoters. Okay, apart from that, what is the product, market, suppliers, what is the nature of the business, what is the employment, product and services, everything you will understand. Okay, franchise, license, patents, you remember any 5 points to 6 points such that you can write it properly. Okay, next is the accounting policies. So as an accountant, you have to see whether the accounting policies is appropriate or not, whether they have followed, and what is the any changes. Okay, if whether there is any changes in an accounting policies. Okay, what is the effect of the recent changes. Next, then they have to look into a material effect of the accounting policies on the profitability. So what is the effect on the profitability because of this changes, right? And what is the summary, what is the summary of the accounting policies used by the target company. So whether they have adopted in the recent past, okay, whether they have changes have been made in the recent past, because of that so that they can be acquired, okay, whether what is the reason for the changes in the accounting policy, you have to see these things. So these are the key points you can write: material effect, summary of accounting policy, effects of recent changes, right? Next, what is a review of financial statements? So when you are reviewing the financial statements, you have to see every aspect. So let us take a easy trick to remember. One thing is the balance sheet. Another thing, you have to see the P&L. So in balance sheet, you are going to see whether the financial statements of the target company is as per the prepared and presented as per the framework, okay, preparation and presentation of the financial statement, that is PPFS. It is based on the framework, and whether the accounting standards has been followed, relevant accounting standard. And after that, you have to see, you have to review the operating results. This is nothing but your P&L. And then you can also consider the extraordinary item of income and expenses, right? Next, you here you are seeing the operating results, okay. Here you are going to see the extraordinary item that is affecting your operating results, and last is your trading results for the past 4 to 5 years. These are the important points you can remember in the review of financial statements, okay. Apart from this, it is an important question, okay. What are the hidden liabilities and overvalued assets? There may be a question, okay. Very easy, simple question. Just listen to me. You're going to write 5 points. I'll make you remember the 5 points. So hidden, something is hidden. What is hidden? Your future, present, past. Everything is hidden. Your future, present, past, everything is hidden. Now, what is the future? Future is nothing but your future lease liabilities. First one. Second, present, future, present, okay. Then we'll go to past. So what is the present? Present is the tax liabilities under the direct tax and indirect tax. Let us take it as a present liability. So we are talking about the tax part, right? So now you are going to the past tax. What is the past tax? Long pending sales tax assessment, okay. It is a long pending tax assessment, so it is also past. Now here you have two more past. Both past relates to the labor. One is the unresolved labor litigation and another is the labor claims, okay, where the agreement has been expired. So one is the labor litigation, another is the labor claims. So these are the three items of past. One is the long pending tax assessments, and then labor litigations and labor claims, okay, where the agreement has been expired. Now next we are going into overvalued assets, okay. Overvalued assets, if you remember the Ind AS, you can easily remember these points. Ind AS 2, Ind AS 2 relates to inventory. So here you can go for inventory, like absolute slow moving inventories, okay, and inventories above the NRV. You can write this point. Second point, Ind AS 16, plant and machinery, okay, impairment due to the sudden fall in the market value. So this is a combination of Ind AS 16 and 36, right? Next, Ind AS 38, intangible assets of no value. And Ind AS 40, 2 points related to investment. There we have studied investment property, but here it is an investment. So investment carried at the cost, though the realizable value is lower, and you have the very low rate of income or return, right? So apart from this, easy points is that uncollected or collectible receivables, and you can also write the litigated assets and property. These are very easy points. If you feel like 1 and 2 are difficult, you replace the uncollected or uncollectible receivables, okay, and litigated assets and property. Next we are going into taxation. I'm not going to discuss taxation. It is same, like it is an integral component of the financial status of the company. So you have to see what is the tax effects of the merger or acquisition. You have to see this, okay. Next, cash flow. This is important. Here you have to see what is the pattern of the cash, okay, cash flows, and whether it is generating the cash or not. What is the major trend? You have to see these things in cash flow. How can you what are the specific things you have to see in the cash flow? They will ask a question. So it is necessary to check 5 things in the cash flow. First of all, whether you have the ability to pay. What is that? Is that company able to honor its commitment to the trade payables? So for trade payables, we have to pay, right? Okay. For trade receivables, we have to receive. Means that how can you receive from them? Whether you can receive it or not. Okay. Next is how well does it employ its deploy its funds? So how can you remember? First of all, ability to pay, ability to receive. Okay, get back it. Next, whether you have idle fund, okay, whether you have idle fund. So are there any funds lying idle, whether there is a maximum benefit out of it? If idle funds, how it is deployed, how well it has been deployed, what is your investment pattern? Okay, so if you have deployed it, how you have deployed, what is your investment pattern? So this is how you will frame the question and you can remember all your cash flows. And apart from this, you have to go for financial projection. Financial projection, you have to keep it for the next 5 years. This is something you have to study once. Okay, this is, I feel like this is something important. Read once, don't skip this part. Okay, next, management and employees. So the people who are working, who are taking care of, okay, is there any excess workforce is often witnessed, more than required, whether there is more than required people are there or not. Okay, we have to see whether all the labor laws or have been followed or not, because if it is not followed, then you will be having penalties, etc. Okay, and apart from that, whether they are following PEF, ESI, gratuity, these have been properly complied or not, these are the things you have to verify. Next, statutory complaints. In going to statutory complaints, in the due diligence, you have to have a checklist. Okay, checklist, that is which are the laws applicable. Okay, applicable. So if the laws are not followed, then you will be facing the charges, etc. Right? So if they have not followed, then you have to quantify as an accountant, if you are doing the due diligence, then you have to quantify, and whatever the impact you have to give in the financial results, it should be shown as such. Right? Yes. So that is how we have completed the financial due diligence part. And here, this is one question, test your understanding. If you study, you can easily remember this question, not very difficult. Next, work approach to the due diligence. You know, due diligence is the very most expensive, because we are purchasing a business. So purchasing a business is very expensive, right? So you have to assess a fair value. So how will you going to assess the business fair value? It's going to it's going to go through some steps. What are the steps? First of all, assessing the business fair value. First of all, you have to assess the business. Okay, first hand by a site visit. Go and see the business. So after seeing the business, you are going to start your due diligence process. Okay, so due diligence process with the acquisitioning company by defining the key areas. Okay, these are the key areas. So first you go and see the business, site visit. Second one, defining the key areas. Third one, you are going to review and report on the financials submitted by the target company. So they are going to give some financials, on that you are going to provide a report. And lastly, you are going to, on the basis of the site visit and defining the process, third one, after reviewing the financials submitted by the target company, now you are going to prepare a offer based on the completion of due diligence. Right? So discovering which is the proper strategy is always challenging. So you have to take into the numerous factors into accounts. Right? Apart from this, there is a comprehensive model that describes the approach to the work is illustrated below. So what is a model? You just remember this. We don't know whether they are going to ask this comprehensive model or not, but at least remember this. Okay, this is a LDR. Just visit this diagram once you are preparing for your last day revision. Okay, just revise this and go to the exam. If they ask what is a comprehensive model that describes the work of due diligence, okay, approach to the work of due diligence, then you can write this diagram if they ask specifically. Okay, next, how to conduct a due diligence. So conducting a due diligence, there is a step to conduct due diligence. First of all, you have to start something, right? So you have to start and then you identify what are the trouble spots and ask for explanation. You just explain. Okay, second, you have to get two things. So get, there is a 2 points. First, get a people, best team. Okay, whether if you have a team inside, then that is good. If you don't have team inside, then go and hire an expert. Okay, so when hiring the professional, look for their experience, etc. Now you get the help in all areas. So first of all, you are going to start, then you are going to get two things. One is the people and another is the help in all the areas. That is 360-degree. You have to get the help in all the areas like finance, accounting, legal, marketing. Next, you talk to customers, partners, employees, and or the great resources. Then you take a risk management approach. That is, whenever you are doing the research, you don't go and ask a lot of questions, but you ask whatever you want. Okay, but don't keep on asking a lot of questions. Okay. Next, last, finally, after doing these things, you will be preparing the report. Okay, report detailing the compliances and substantive risk and issues. So with the risk and issues, you will prepare a comprehensive report. Right. So this is how you will conduct the due diligence. First of all, you will start with the open mind, then you will get to know, get to the lot of peoples, and then you will cover all the areas. So start, get the people, get the areas, and then you will talk, then you will take. What you will take? You will take the risk management approach. Finally, you will prepare the report. And the last and the very easiest area, contents of the due diligence report. So in due diligence report, you are going to have your summary, introduction, background of the target company, and objective of due diligence. This is very simple, right? And assessment of assets, financial liability, assessment of tax liabilities. Okay, here I have marked, okay, tax liability and statutory liability, and assessment of operating results and assessments of net worth. Right. And extra point is that SWOT analysis. So this is how I have completed the due diligence in an around 25 to 27 minutes. Okay, cover these areas properly and try to revise it as much as possible. And I will come up with the next videos to help you this way. Okay, and kindly share this with your friends if you find it useful, and just give me the suggestions whether this is useful to you or not, and we'll see you in the next video. Okay, all the best guys, bye bye.